decisions based on the Pro 17 system. So if you're looking at a $24 stock and that stock has upside to 30 and downside to 17, then this is going to give you the ability to say with some type of predictability that it is going to 30 or that it's going to collapse to 24. How do I, then you have to determine how am I going to maximize my option play on that. You have to have a mechanism to make a decision based on it, and it's always the underlying stock that's there. So this will clean up your idea if you're just looking at the option pricing and you're not identifying where it's going to go to within that 17 days. 90% of all options expire worthless. This is going to increase your odds of being in that other 10%.
Okay. Here's another good question. Is the 90% accuracy based on sure trades or other pool of recommendations?
Mike, you've done mostly an analysis on that. I only look at it is in general. In general, in all the stocks that we forecasted since October when we finally opened this up to the public, we're over 90% accurate, and that includes when you get an analysis on a stock, and if we have covered that in the past, if that's something that's covered on a weekly basis, a monthly basis, every time a subscriber writes in for that analysis, we put analysis, we mark the date, and we put it in the notes section. So you can look at that stock and say, was he right on April 1st? Was he right on January 2nd? Was he right on December 23rd? And if you just take all of those, you're going to see 90% accurate within that own stock. Once in a while, you'll see a fault, but it's only about 10% of the time. So it doesn't matter if you look at it on an individual stock basis or as a pool of assets. It's roughly correct within 90% range.
Right. And what you're going to find is it's on the sure trades. In fact, actually, our sure trades have been a little more than 90% accurate. But where the sure trades are excelling is in the rate of return. Our average rate of return is right now in our closed out trades is 26% over an average of 20 days. If you factor in two other sure trades, one I think both of which Todd covered here today, we're just about to close those out. That's actually going to bump our average up to around 34% return, and with an average of 20 days in each trade.
So that lends to the support of what I said before, which is on a 17-day basis, when I put a buy or sell on, you're looking at least 10% return or risk on that buy or sell recommendation for that stock. If it hits sure trade status, you're looking at 20 to 40% returns based on that stock for the next 17 to 20 days. So it's, instead of making that 20% over the course of a year, you've now shortened that amount of time. And if you annualize our rate of return on our sure trades, it's ridiculous.
Okay, here's a good question. Eli asks, how does the Pro 17 system analyze and prevent losses in bubble-like environments like the NASDAQ during 1999 to 2000, where the technicals break away from the fundamentals?
I'll give you an example of when I finally retired as a broker and went independent. It was January 1st of 2000, and I sent out to my clientele base. I had about 500 clients at the time that they need to sell the majority of their positions no later than March 15th, because the Pro 17 system, which I called Real-Time 17 at the time, was forecasting that the market bubble was going to burst and the average behavior could no longer keep up with the market, and I gave them where it would pull back to and everything else. So what it does on bubbles, if you look at the oil bubble, you look at the gold bubble of recent, you look at some of these commodities-based items, Pro 17 identifies it. And you may not find your forecast within the system for 3 months out, but what it's going to do is it's going to let you, if you're looking 3 months out, you're going to have between 3 and 6 decision-making points in time to make it so that you're peaking out at the right time and you're buying in at the right time. So inside these peaks and valleys, Pro 17 identifies it. It tells you far ahead when these things are going to just absolutely collapse. And that was indicative for Mike and our other supporting investors in Pro 17 that helped found the company. When I called the marketplace, they just thought I was crazy that the market would even collapse from 11,400 down to 7,400. I said, hey, it's not me, it's the system. And sure enough, the first stopping point on all that fear was exactly 7,400. And then the next break point was 65 to 6,800, and it fell right into that pocket. That's the result of behavior switching over to panic. And it forecasts that. The human behavior part of the market is the most predictable side of the market. The absolute price of an individual stock is the least predictable part. So why don't we predict behavior versus price? Price will come along with behavior.
All right, here's a question from Raphael. He asked, how many times have you failed the forecast for the short trades? I'm looking at our closed short trades. Since we've been putting them out, we've closed 14 short trades, and one of them has resulted in a loss. It was a loss of 10.5%. For the most part, again, they've been very stellar returns on there. We have a few, single-digit returns, but for the most part, very stellar returns, average of nearly 30% on the short trades. Let's see here. We've got another question. Here's a good question. Here's a question from Kenneth. Kenneth said, I thought you said the Qs were due for a healthy correction. Can you be more specific?
Okay. Within this cycle right here, you've had a nice, this is your first 17-day cycle right in here from the bottom, and you're coming into the end of the next 17-day cycle. So we're not quite there, but we're getting close. This positive slope here will prevent a massive sell-off in the market. So the healthy correction is it's only got risk of 3 points to the downside right now. The best buy price for a person looking to get into the market that missed is somewhere between 30 and 32. So I look at mathematically this slope is positive and now the trend is positive. Mathematically this slope is negative. It looks like it's got a nice positive trend and it can continue to bounce along that line as we go forward. So the correction is there's only about a point and a half, there's 1.5 to 3 points correction in the Qs. So while I can't recommend a strong short right now, I can tell you that if you're long the position, you either want to protect your downside for any backdraft, or you can maintain it because you've only got 10% downside risk. If you're short and you like to play, if you're a short trader in general and you like to play the downside for 10%, well, that's the maximum I'm telling you. But based on Pro 17, I can't say this is an all-out short. It's actually in a healthy state. These points right here, this point here, this point here, and this point here, you'll see in the analysis are called failure to fail points. So when they don't violate the current behavioral pattern, they have failed to fail. So the short side has failed and the long side has prevailed. So in this particular case, we're starting to hit a short-term peaking cycle. If I forecast out from this date here, we are at the 9th day or so in the cycle, so it starts to peak out and it has to go through another failure to fail or failure to succeed cycle. So in this particular case, we're in a position where it can fail to succeed within the next 3 to 4 days. That means it's got to pull back to some support level. Behavior is running out of momentum, running out of buyers, running out of what I call it is you're running out of an audience at this particular point. So if there's nobody no longer buying what you're selling, you're going to come back to a price that people are willing to buy. And right now, the audience is at 30.
Okay. Let's see here.
And then I'll just add to that, Mike, because I've been talking about this a little bit more frequently. In general, I'll talk about, on our conference calls, I will talk about distribution. Any stock or